and welcome to another installment of Liberty Nation's Swamponomics videocast. I am Ellen's economics correspondent, Andrew Moran. Each week, I dive into the morass of top economic news stories and fish out compelling narratives, or I retrieve fallacies that have been accepted as conventional wisdom by the swamp creatures for years. This week, gold glitters and silver spikes. Gold and silver have been on a tear since the market meltdown in March. Gold has skyrocketed nearly 30% so far this year, while silver prices have popped an astounding 50%. The question on every trader's mind is, how much room do gold and silver have to go? The consensus is that gold will soon top $2,000 an ounce, and silver prices are all expected to grow due to a market imbalance when it comes to supply and demand. But why is there such a huge demand for these precious metals? For one thing, there is still a lot of uncertainty in the post-coronavirus economy. We don't know if there's going to be more lockdowns in the near future, if the vaccines will be successful, and if there will be a second wave after the US finishes first wave, which cases have topped 3.5 million. The market is jittery, which explains why it has been relatively quiet in the last couple of weeks. One day it's up 80 points, the next day it's down 60 points. The other issue is fiscal and monetary stimulus and relief. Congress is about to pass another $1 trillion or multi-trillion dollar spending bill, adding to its already bloated budget deficit and federal debt. Europe just approved an $850 billion stimulus package in addition to another $1 trillion coronavirus-related budget. Meanwhile, all the central banks have their printing presses turning on full steam ahead, creating concerns of inflation once the COVID-19 pandemic simmers down. We have already seen hints of rising price inflation in the recent CPI data, which you can learn about in my previous Swamponomics videocast about the June numbers. Wall Street thinks the metals is where the action is at. According to the Wall Street Journal, investors are putting nearly $3 billion into gold mining stocks, suggesting that they think this bull market could last for a lot longer than just a few months. Traders are also pouring into gold ETFs, which are having their best performances in several years on a week-to-week basis. While critics like Warren Buffett think gold is just a shiny metal to stare at, the yellow metal possesses an intrinsic value. Like silver, gold is an important component for a lot of the durable goods we consume today, from electronics to computers to medicine to aerospace. Gold is critical as a safe haven asset, but this 5,000-year-old metal is a lot more than just placing it in your vault. That's it for me this week. Please read my full Swamponomics column, where I further discuss the rising tide of gold prices, Joe Biden proposing a more woke Federal Reserve, and a White House vowing to protect the US dollar as a reserve currency, reversing a previous position. Thank you very much.
Go deeper on the topic discussed in this video, head on over to one of these links here or go to our Liberty Nation Roku channel. Thanks so much for watching, and don't forget to subscribe and hit the notification bell for Liberty.